Hey guys, so my crystal ball actually seemed to be a lot more clear than I expected. So as we're moving forward into the next quarters, I'm hoping the crystal ball is a little clearer. So we're looking backwards, right? So it gives us evidence that should lend us forward. So right now we're looking back at the first two quarters of 25. So in the very first quarter, if you've seen that update, you'd have seen that the average for that time period was 576, 965. What's very interesting is second quarter's average is 575, 113. And yes, it's slightly lower, but by 0.032%, which is just a small enough variant that it's really just flat, which is what I've kind of been predicting. We've seen the interest rates sort of hold. We've seen overall market conditions with some fear of the tariffs and other things going on. There's just this uncertainty still in the market, but we're holding price. We do have more listings, but we also have way more sales. In the second quarter, we saw a third more sales, almost 500 more than in the first quarter. And the numbers look like 922 sales in the first quarter and 1,416 sales in the second quarter. Now, inventory levels have also risen. I think we're about 1,600 homes available back in the first quarter, basically at the end of March. Right now, we're about 1,870 homes. So there's about 200 more homes for sale, but we've also seen the average go from 256, 316, and 350 to in April going to 442, 505, and 469. So again, you can see that basically there's been almost 125 more sales per month in the spring market, which is somewhat to be expected. Again, we're heading into the summer market. So again, when we're looking at that, usually it's going to be a little bit lower. We'll usually see maybe 350 to 400 sales over the next 3 months. And then we have the fall market, which picks back up heading into the winter time. So again, if you're looking to buy or you're thinking about investing, again, right now is a great time. We've seen the average days on market start to fall, which means that homes that are selling in 22 days instead of 32 at the beginning of the year, which again means that when you price your home correctly, when you have correct expectations, we're seeing the market move. A big portion of the market is still homes that either were purchased at a price that the market currently won't bear, which means the debt on it is greater than the value, or sellers' expectations are still, 2 years old, which means they still have an overinflated evaluation based on what they thought their home was worth back in 22. It's not anything wrong, it's just the reality. So if you're willing to listen to reason from the buyer perspective and from the seller perspective, we can find great opportunities in this market to get you into your next home or your first home. Again, if you are looking to move, it's a great time because we're so stable that you're not really taking a risk if you're getting invested into the market, because again, outside of any major changes in policy, we're probably going to see the market maintain stability through the rest of the year. And I'd expect that maybe we'll see the average stay around 575 as we roll through almost all the way to December. So if you're looking into my little crystal ball, which so far this year is right, and I will admit there's always a chance I'm wrong, but at the end of the day, if you're looking to invest, I think it is critical that you get in front of your mortgage brokers, verify your financials, and get yourself into a position where if you are investing, it's a great time to start looking at the market because this may be the cheapest real estate we've seen in Windsor-Essex or may ever see again.